US stocks fell sharply on fears of a Russian invasion of Ukraine. Following the recovery attempt seen late in the previous sessions, stocks showed a substantial move back to the downside during trading on Thursday. The major averages all showed significant moves to the downside, with the tech-heavy Nasdaq helping to lead the way lower. The major averages saw further downside going into the close, ending the session near their worst levels of the day. The Dow tumbled 622.24 points, or 1.8% to 34,312.03. The Nasdaq plunged 407.38 points, or 2.9% to 13,716.72, and the SP 500 dove 94.75 points, or 2.1% to 4,380.26. The sell-off on Wall Street came amid renewed geopolitical concerns, as the Biden administration has reverted to describing a Russian invasion of Ukraine as imminent. The evidence on the ground is that Russia is moving toward an imminent invasion. This is a crucial moment, U.S. Ambassador to the United Nations Linda Thomas-Greenfield told reporters this morning. President Joe Biden also told reporters, as was leaving the White House, that there is every indication that Russia is prepared to attack Ukraine. Adding to the concerns, the State Department said Russia has expelled the deputy chief of the U.S. diplomatic mission in Moscow. The latest developments come after Ukraine and pro-Russian separatists traded accusations of attacks in the eastern part of the country. Russian state-controlled media claimed that Ukrainian forces had shelled territory held by the separatists, while Ukraine has accused Russian-backed rebels of attacking a village in the region. Negative sentiment may also have been generated in reaction to the latest batch of U.S. economic data, including a Labor Department report showing an unexpected rebound in initial jobless claims in the week ended February 12. The Labor Department said initial jobless claims rose to 248,000, an increase of 23,000 from the previous week's revised level of 225,000. The rebound surprised economists, who had expected jobless claims to edge down to 219,000 from the 223,000 originally reported for the previous week. The Commerce Department also released a report showing new residential construction in the U.S. pulled back sharply in the month of January. The report said housing starts tumbled by January 4% to an annual rate of 1.638 million in January, after inching up by 0.3% to a revised rate of 1.708 million in December. Economists had expected housing starts to edge down by 0.1% to a rate of 1.700 million from the 1.702 million originally reported for the previous month. Meanwhile, the report said building permits climbed by 0.7% to an annual rate of 1.899 million in January, after spiking by August 9% to a revised rate of 1.885 million in December. Building permits, an indicator of future housing demand, had been expected to plunge by 6.0% to a rate of 1.760 million from the 1.873 million originally reported for the previous month. A separate report from the Federal Reserve Bank of Philadelphia showed manufacturing activity in the Philadelphia area expanded at a slower rate in the month of February. The Philly Fed said its diffusion index for current activity slid to 16.0 in February from 23.2 in January, although a positive reading still indicates growth in regional manufacturing activity. Economists had expected the index to dip to 20.0. Sector news: Semiconductor stocks showed a substantial move to the downside on the day, dragging the Philadelphia Semiconductor Index down by July 3%. Nvidia helped lead the sector lower, as concerns about flat profit margins and the graphics chipmakers' exposure to the cryptocurrency market have overshadowed the company's better-than-expected fourth-quarter results and upbeat guidance. A sharp pullback by Treasury yields also weighed on the banking sector, resulting in a 3.7% nosedive by the KBW Bank Index. Housing stocks also saw significant weakness on the day, with the Philadelphia Housing Sector Index plunging by January 3%. Biotechnology, airline and brokerage stocks also showed notable moves to the downside, while gold stocks bucked the downward trend amid a sharp increase by the price of the precious metal. Other markets. In overseas trading, stock across the Asia-Pacific region turned in a mixed performance during trading on Thursday. Japan's Nikkei 225 index slid by 0.8%, while Hong Kong's Hang Seng index rose by 0.3%. Meanwhile, the major European markets all moved to the downside on the day. While the French CAC 40 index dipped by 0.3%, the German DAX index and the UK's FTSE 100 index fell by 0.7% and 0.9%, respectively. In the bond market, Treasuries moved significantly higher after ending the previous session roughly flat. Subsequently, the yield on the benchmark 10-year note, which moves opposite of its price, slid 7.5 basis points to 1.972%. Looking ahead, developments regarding Ukraine are likely to remain in the spotlight on Friday, overshadowing reports on existing home sales and leading economic indicators. For comments and feedback, contact editorial@artnews.com. Biotech stocks facing FDA decision in February 2022. Biotech stocks facing FDA decision in January 2022. Biotech stocks facing FDA decision in December 2021.